everyone. Welcome to today's session of our ZipChat. So I'd like to welcome everybody to episode 21 of ZipChat today on portfolio management workflow optimization, customizing the advisor experience. Today's session is we're gonna talk about some trends, some disruptive ideas, and some tools and frameworks. Before we get into that, I just want to let everybody know that the T3 Advisor Conference is coming up next May, the beginning of May. And it's a practice management and technology conference for financial advisors. And the three T's are for technology, tools for today. And we are a sponsor at that conference. And we're going to have a session on just similar to today's session. And we also will have a booth there. So if you are at the conference, please come by and say hi. And we also, joining me today is Bill Angino. He's the Chief Compliance Officer and EVP of Fisher Financial Services. And Jim Sloan, he is Accelerate CIO and EVP of Financial Services. So let's just get started with our topic. So Jim, a couple of months ago, we talked at length in a recent ZipChat about the topic of mass customization with FinTech. Can you recap for us the highlights of what we discussed there?
So I think last time we started out with a little bit of a definition of mass customization, right? So just to refresh the audience, it's kind of the process of delivering market goods and services that are modified, for a specific customer need, right? Or said another way, it's the delivery of personalized or bespoke products and services. So with that in mind, last time we talked a lot about how the portfolio itself could be customized, right? And so some examples in wealth management might be, where a client or investor might want, advisor might be helping a client to, match a unique investment strategy, or, manage his risk tolerance or her time horizon or investment style. So there are some ways that, an advisor typically, customizes a portfolio. We also talked a little bit about, and actually dived pretty deeply into the whole concept of direct indexing, which is a relatively new and trending concept, that really involves mass customization, but against, external benchmarks like financial indices. All right, so it's the idea of building an investment portfolio that models a specific index, like the S&P 500 or the Russell 2000 or the Russell 3000, where the advisor buys a representative share of the index of stocks and manages those assets by then rebalancing, that portfolio over time. But it often, it tries and seeks to emulate the index, but there's various strategies that might cause it to vary somewhat from that index benchmark, which is why a lot of customization around this is needed. A good example is, basically there's four types of direct indexing strategies. The first being tax optimization, where you're focused on, advisors focus on, conducting tax loss harvesting or capital gain harvesting or charitable giving on behalf of the investor. The second area would be personalization, or said another way, sort of value alignment, right? Where some examples might be, environmental social governance or social responsible index investing, faith-based index investing would kind of fall into that sort of personalization category. A third area or strategy of direct indexing might involve rules-based strategy, which is more systematic, like factor-based, investing, or, some form of, leveraging smart beta, but it's a more systematic approach and a very rules-based approach to direct indexing. And the third would be just, customization in general, where, maybe an investor wants to follow, say, the S&P 500, but is already in his or her portfolio very weighted, say, for example, in technology, or very weighted in financial. So they might not want to then become overweighted in that area. So they might strip out, the whole technology sector, or maybe a specific legacy holding. Maybe they happen to hold a lot of Intel or Microsoft for some reason, and so they want to not hold that in the index. So that's another way you would vary or customize that portfolio, away from the index itself. So that's kind of the things we talked about last time in terms of customization.
Great, great. Thanks for that recap. Are
Sure.
you ready to jump into today's topic?
Ready when you are.
Okay, kick it off, Jim.
All right. So I think, we talked a little bit about customization of investment portfolios last time. What we're now talking about, we're going to step away from the portfolio itself and discuss customization around portfolio management workflow, right? So that's the whole process, right? That an advisor like Bill, who's on the call with us, it's all of the workflow involved in marketing to a client, to onboarding that client, doing um, preparing a proposal, bringing them into the system, managing the portfolio, rebalancing their portfolio on a regular basis, tying back, trades and confirming trades to a reconciliation process. So all of these things, whether it be portfolio management or modeling or rebalancing or recon, these things are, part of the advisor's workflow. And we're going to talk about, port, you know, ma, you know, sort of optimizing that workflow versus the portfolio itself. I gave an example of, portfolio management, in terms of the platform. But if you think about, you know, advisors oftentimes are using different tools, right? And so there's what we call kind of swivel seat, where an advisor might be working on one application for portfolio management and then needs to turn to another application to do rebalancing, and another for their CRM, and maybe another to build a proposal. So to optimize that workflow, what we're talking about is sort of bringing those solutions together, either in an end-to-end turnkey solution or just a clever way of integrating them through a central dashboard or a way to do those functions, but kind of reducing that swivel seat, right? So, tying the CRM is one of the things that we are really seeing a lot of interest in the market right now, and specifically T3. There's a lot of chatter about how, honestly, today's advisor is spending an inordinate amount of time in the CRM. Like, that's the tool that an advisor is using really to manage the relationship. And from that launches into the actual portfolio management and some of the details around trading and rebalancing. So what we're talking about is integrating the marketing, the sales, the proposal generation, the client onboarding, the portfolio management, sort of all in an end-to-end solution to optimize the workflow. We'll talk a little bit about modeling, and making sure that there's a support, wide support for models, models that maybe then can be shared, with one advisor in the firm with another, or extend, even outside the company into the broader, the community, or be able to support third-party models. Of course, direct indexing plays into all that as well, and we've talked about that. We'll talk about rebalancing, but more modularly, like as a service, right? So, we'll see a framework a little bit later on that loosely couples rebalancing with portfolio management, in so much as that rebalancing service could be tied to other portfolio management engines, right? And so, if using, for example, the Accelerate framework, which we'll see in a little while, that rebalancer could be, seamlessly integrated and just, be an end-to-end, platform for both, CRM management, CRM, portfolio management and rebalancing. But, it could also be plugged in, relatively easily, because it's, the design is loosely coupled through an API, which we'll see. Things like trading and support for real-time trading, as well as upload of trade files, and sort of, being able to set up automatic trade execution based on rebalancer suggestions versus, having, a workflow that's more configurable for various levels of approval before a trade's actually executed. So all of that, and the ability to be able to configure that and optimize that for an advisory firm is important to have in a solution. And then we'll talk a little bit about reconciliation and the ability to extract data and different formats, and to run reports on it, and sort of just being able to tie that all back into, order execution that was done maybe the previous day with various custodians. So that's sort of in a nutshell of what we'll be talking about today. And let you maybe hand it off, and let Bill get some two words in here.
Sure. So Bill, we'd like to understand Fisher's experience around portfolio management and the steps you've taken to optimize your workflow. Can you start off by sharing with us some of the solutions that you've used historically and the part that they've played in your firm's operations and workflow?
Sure, I'm glad to do that, and thank you and Jim for having me here. Just like to start with the fact that since the beginning of our firm, which was 1989 when I started working here, operational efficiency has been the cornerstone of all our motivations. We're striving to leverage technology whenever possible to keep our head count as low as possible. So we like to have as few people here doing as much as possible. And that is exemplified through when I first started, we had two professionals, my boss and myself, and a part-time person, and we managed about $50 million with 60 accounts. And today we have close to $500 million under management and over 1,000 accounts. And we have three professionals now and two and a half, two full-time, one part-time staff. So, and able to get there, we had to leverage technology and efficiency, but the majority of the efficiency has come through processes over time, different frameworks, and amazingly, we are still using the same portfolio management software that we did in the very beginning. I mean, it's been updated a little, but it's the same platform, same skeleton. And that's an example of why customization might be important, because there are various reasons why you want to stick with something even if it is suboptimal, and we will be discussing that later. So that's kind of a summary of where our firm's been with efficiencies.
Okay, great. So Bill, with that as a backdrop, how do you feel that the advisory landscape has changed in the recent years? And what have been some of your firm's biggest challenges?
So I would say over the last 5 years, there's been some tremendous changes. The one that strikes me the most, and might not be the most interesting to everybody, is the custodians, the firms that physically hold the money like Fidelity, Charles Schwab, has really started to embrace the use of their data. When we first started, their data was highly guarded, and we would manually have to enter our data into our systems. We couldn't get even automated downloads from them, and then they would provide us downloads. But now they have project teams that work with firms like yours to develop APIs to actually pull into their data and extract this data for use in outside products. So that's been a really big change, I think, and a very good one for promoting customization, because now you really have access to this data, which historically has been locked up. Another change is there's a big compression of lowering advisors' fees and cost to trade. Nobody really wants to be paying fees or anything, so efficiencies are very important to offset these cost reductions that we're seeing. And then we're also seeing individuals like would be our clients are becoming more interested, we're told, in aggregating all their data together, not just what I have. So there's a big need to aggregate data from like their checking accounts or life insurance policies all in one place, so they can go to one portal and see everything. So that's another change. And the last change I'm seeing is the companies that historically been servicing our industry to allow us to operate, the software providers, the people who create trading tools. There's been a large consolidation of these. These have either been integrated into your custodians or integrated into themselves, that there are very few independent players anymore, and you're really stuck with all or nothing type of approach instead of buying stuff a la carte like you used to be able to see. And some of the big challenges that we're facing is just cost of labor is obviously gone up a lot, as everybody knows, especially with costs of benefits. So customization, automation is good to try to keep your workforce as lean as possible. There's also data is just enormous volumes of data. Just trying to get your hands around that and to be able to pull out the necessary information you need to manage your stuff in an efficient manner has become more and more challenging. And then just staying ahead of technology trends, like a lot of these things are going to mobile apps and portals and all this. Trying to stay ahead of all this has been a real struggle for our firm over the years. So that's probably a good summary of this topic.
That's great. So Bill, as you've looked at the tools and product offerings that are out there for advisors over the years, and especially more recently with all the market consolidation that you just mentioned, where do you feel some of the solutions you've evaluated have fallen short?
Well, the first thing is that I wouldn't like to use the word that they've fallen short, because most of the products are good, but they're made for the averages. You know, you can't build a product that's made for Bill Angino or Fisher Financial Service and then mass produce it and sell it to everybody. You know, it's kind of like the fast food approach. You got a menu, you go in and you order. Well, you know, as most of you might know, going to a fast food restaurant, sometimes you go there and you don't want your Big Mac with everything on it. You know, and that's kind of the approach. You know, you go buy a rebalancer. Well, it's the Big Mac and rebalancer. You get what brilliant people put together and say that everybody wants in a rebalancer. You know, and if I don't like the pickles, well, the pickles come with the rebalancer. So that's where I feel that customization is important. It's not that the products fall short. It's that not every process that I do is similar to the processes other people do. And the other thing is, it's just very difficult for firms to change. So I've been doing things for, you know, a very long time, 32 years, I think. And, you know, it's real hard to change by going and getting a product. And now they're saying, well, your way's okay, but our product does it this way, and you're going to have to relearn to do it this way. So that is, you know, another reason why you might want customization. The other thing is we like to have a little more control of our data, and a lot of other products, you're turning your data over to them, they keep it current for you, but you lose control of that, being that if there's something that needs to be adjusted, you got to call a number, get a ticket order, and you know, so you lose that service end, and it's just, in the long run, it's not sometimes as efficient as you would expect the automation to be. So that would probably be, you know, the main reasons why we like customization.
So Bill, that last point that you made around customized solutions is critical to today's discussion. Can you elaborate on this and explain why it's so important to Fisher?
Yeah, as I mentioned, you know, a little bit before about, you know, the McDonald's approach is also important to us because we have some very complex situations, so that it's not as easy to automate something that is more complex with some generic set of tools. You know, as you imagine, a master craftsman doesn't come in with a hammer bought from Sears to do their project. You know, there's special tools for every trade, and for the complex situations that we have, sometimes we need a special tool, and in this case, the special tool is something that is designed and built around our workflow, not a generic average workflow that works mostly for everybody. You know, it's best to start with the foundation of the way we operate and the way we want to do things. And then the other thing is, the nice thing about a product where you're just enhancing certain areas is that you're able to roll these out over time. It's not like, oh, I'm switching my portfolio management software because I want 5 new tools. So I need to convert all my data into a new system to create these 5 tools that I want. And now I'm burdened with the fact of convincing my staff that it's worth their time to relearn all these tasks they already know how to do, so that Bill gets these 5 new tools that he likes to have. And then you also have the downtime for this rollout. So you're running simultaneous systems, and to make sure that you have accuracy in the information. So to me, it's kind of nice if you already have a product that works well and there's a few things that don't work well, you can work on them in pieces. And if it's trading, that's the one thing that doesn't work well, you can run your other 90% of your systems the way they are and have someone working on this trading module as you continue to trade as you were until this module is in place, and then you can move on to CRM or however you want to handle that. And you can keep the 80% of what you have that is useful and not have to develop a whole bunch of new workflows, new processes, and just it's good for morale too, from my experience. People don't like change. So if you can keep things as similar as possible, as long as possible, um, you kind of are able to really get your cake and eat it too. So that's kind of why we like the idea of customization.
That's great. Thanks for setting that up for us. So switching over to you, Jim, with all of that now as a backdrop, why don't you talk a little bit about Accelerate's approach to customized solutions and those related benefits?
Sure. I think we have a slide for this, right, Joe? As you're bringing that up, I'm sorry, but I'm a little distracted by all these food analogies that Bill was using. McDonald's was the first stock that I ever bought, and I'm definitely an extra pickles guy, and I'm just really pleased by the analogy. Honestly, I didn't know you were going to use that analogy, and so I just want to, a little quick plug for Accelerate. Special orders don't upset us either, Bill. So it fits right into the customization theme here. But thank you for that, and I'm also now realizing I didn't have lunch, and I'm probably going to go hit the Golden Arches right after. They're getting a lot of free advertising. And in any case, so advisor tech frameworks, right? So this is the essence of what Accelerate has done for the financial advisory, arena, in that we are building out, solutions that we essentially hope to accelerate the development process, right? And so what we define a framework to be is sort of an amalgamation of process, technology, subject matter expertise, kind of coming together to deliver that solution like effectively and efficiently, right? It's typically incorporated into client solutions. It's what is our framework then becomes part of the basis of the client solution. So you're not starting ground up, but you have a springboard place. And what that essentially does is reduces the client's time to market with their product. Some of our frameworks are, kind of cross-cutting, across many different industries. But we have also designed some specific, and not just financial services, we're talking about those today, but very industry-specific frameworks, right, that help, a certain area. So by leveraging these frameworks, we can reduce, their overall our cost to build out the solutions, and we can then price those solutions more effectively and then pass along those reduced costs to clients. Our frameworks have been featured. They're going to be featured in the upcoming T3 conference that Joe mentioned. They've been featured there before at another conference, but they really tell a very compelling story around Accelerate's ability to use our application and design and development capabilities and rapidly deliver customized client solutions, doing those extra pickle solutions.
So Jim, are there specific frameworks that Accelerate has developed with portfolio management and financial advisors in mind?
Yes, Jill, thank you. I guess the next slide we'll talk about the first one, and I kind of hinted to this a little bit earlier. So we have a solution called Total View, which is a portfolio management solution that we've essentially built right on Force.com. It's built right on the Salesforce platform, ground up, so it's fully integrated with the Salesforce CRM. So, those that are already using Salesforce, this is sort of plug and play. Those that are not might consider a Salesforce license if they wanted to leverage this framework. But essentially, it's a cloud-based solution, very high performance. It allows advisors. It has everything that an advisor would expect in terms of sort of it's got the roll and the burger and the cheese, right? It's got the ability to handle the account portfolio, to import accounts, to manage the holdings, to set up models, to if used with our rebalancer, which we're going to see in a little bit in the next slide, to create and establish strategies that you rebalance the portfolio to. It's got the ability to support uploading of trades via trade files, or to do real-time trades via a solution called FixFlyer. Supports securities and securities management, as well as trade rule, transaction maintenance. We have trade logs to look at what decisions that the rebalancer may have made in recommending certain buys and sells. And effectively, it lets firms like Fisher get out of spreadsheets, or to help automate some of those manual processes that Bill was talking about. So that's essentially what Total View is. And while it could be licensed out of box, our preference really is for our clients to absorb this framework into a solution of their own. So it really just, again, as we talked about, accelerates that entire development process. And our desire is to leverage that base functionality and create a completely custom solution that's unique to a specific firm's workflow.
That's great.
Yeah.
What other frameworks does Accelerate offer that might be relevant to this discussion?
Yeah, so there's the total rebalance. This is a rebalance framework. We call it Total Rebal. So this is the rebalance, piece that I explained earlier. It's loosely coupled in so much it could be used to supplement another portfolio management platform. If a firm, like Fisher, was very tied to their platform, as Bill talked about, they're still using the same platform they used 30 years ago. We can, through an API, tie in our rebalancer solution. So it's cloud-based, it's high performance. We like to call it portfolio rebalancing as a service, or RAAS. And it totally automates the rebalance function, right? Eliminates, spreadsheets and that manual process. And it's built around a RESTful API for those of you in the audience that might be a little bit more technical. It uses a REST API and JSON formatting to create buys and sells. Essentially, it takes the account holdings and the portfolios and the security prices and the models as an input. It does its rebalancing in an AWS Lambda function, and then returns back to the portfolio platform the recommended buys and sells. So it's performing that rebalancing according to various trade rules that can be customized and set up as preferences in the system. And it is able to rebalance at different levels, at the household level, at the account level, at the portfolio level. And obviously, when it's combined with our solution, it provides a sort of a turnkey solution that's runs right on top of Salesforce. So that's a little bit about our rebalancer.
Awesome.
If you want to go to the next slide, we can talk about one last framework that as it relates to wealth management and the advisory workflow, would be something we've called File Broker. And it's essentially a file and data management solution, right? It's a processing platform that sort of extracts and transforms investment data from various sources. You think of custodian, of all the different files that are generated through, a platform interacting with a custodian, like a Schwab or a Fidelity. There's different files that then need to then get brought in, and then you can use this platform to bring that data in and normalize it and report on it, and certainly, facilitate the entire reconciliation process. Out of the box, this will handle, standard account position files, trade confirmation files, settlement files, but it's easily configurable to handle other file types and easy to map the data points so that, the data that is coming in and out of a portfolio system or coming from the custodian could sort of be all normalized and be sitting there as a repository for use, not just in the reconciliation process, but for various other reporting that's needed. So this is another example of an advisory text, framework that we build out that's intended to be customized by a given firm.
That's great. So for both of you, Jim and for Bill, Accelerate and Fisher have worked together in the recent past to build out some of the frameworks that are intended to springboard development of customized advisory solutions. Can the two of y'all take us through some of the collaborative work and share also how these frameworks were then leveraged to customize the solution for Fisher?
Yeah, sure. I guess I'll start out, and just in full transparency, and just it's been a delight actually to work with Fisher, over the years, and we actually collaborated, with Bill and his firm right from the get-go, and in building out that base framework for portfolio management, obviously consulting some others as well, and doing some research and having built solutions like this in the past. We brought all that information together, but Fisher was very, and Bill himself was very instrumental in helping us build out our what we call our basic portfolio management solution. So those frameworks that that we just looked at, those various slides, we build in basic features for rebalancing, like raise spend cash, and support for custodial cash, and rebalancing sector, rebalancing at the portfolio at the sector level or at an asset class level, like rebalancing all equity-based models or all bonds, rebalancing all holdings for a given client versus a single security maybe or group of securities in the portfolio, rebalancing only overweighted securities versus underweighted securities, rebalancing to target with configurable tolerances, rebalancing, um, you know, having the rebalancer generate, again, trades that could then execute automatically, or you can build an approval process around. So these are some of the base features around rebalancing that we build in terms of trading. Things that you would expect would be sort of minimum trade rules, and trade rules around cash, around shares, around percent of an account. Don't buy, not buying certain securities. Don't buy, don't sell. Accounting for redemption fees as part of the overall, costs of a fund. Support for wash sales to make sure that, if you're going to leverage wash sales for, tax loss harvesting, that you're in compliance with federal regulations and not, you're not trying to swap out a security that's too like this security within that 30 days. The idea of equivalent or alternative securities, within a portfolio in the event that for some reason you just cannot trade a given security. So this concept of equivalent or alternate securities is built into the base engine. I mentioned before, support for uploading trade files versus executing real-time trades. Of course, with all the discussion around UMA and SMA trading and trading across, you know, different accounts, against multiple investors. We build in, obviously, fairly complex block trading capabilities and support for allocating, accounts across, multiple accounts and households and investors. And, obviously that would also entail, support for fractional shares. In terms of modeling, building in standard models with categories that you would, with levels that you would expect. We build in 3 levels of levels into our model capabilities, including, a category level, a sector level, and a security level. But then we allow, those models to be rebalanced across the client's, potential household and account at the account level or at the portfolio level. We build in this concept of a model of models. So any given model that was created, you can then build a model and use that model as a building block for another model. Things like dynamic model allocation and copy model functionality, all again built into the base platform with, things like reconciliation and some base performance reporting. So all of that we build into our solution, Accelerate Total View and Accelerate Total Reval. And again, Bill and his firm was really instrumental in helping guide some of that and helping us figure out, hey, this, does this seem like it's more industry wide? And all before the next topic, I think, that we want to talk about, which is how we then customize that framework for Fisher. So with that, maybe Bill can jump in here and kind of explain some of his experience when as we collaborated, and maybe kind of give some examples of ways we may have then customized what we build out for Fisher specifically.
Thanks a lot, Jim. So we started with Jim and his team. We approached him because we had a difficulty in our firm, and mostly it's revolved around trading. As I mentioned earlier, our number of accounts has enormously increased over the years, and I'm the sole trader here. So keeping up with that has been a challenge. I've been using Excel spreadsheets, and that is useful, but it still consumes a lot of my day. I would say 40 to 50% of my days are consumed with this trading function now. And also, we had a lack of, as I mentioned earlier, also getting our data together in a format that's useful to us and useful to our clients. We'd like to present comprehensive statistics from multiple sources in one report without having to manually put this together. So this was the project that we brought to Jim and his team to try to help us overcome these challenges. And this project was a ground up solution. We didn't start with any framework other than the ideas and concepts that I drew out on flowcharts and worked with Jim and his team to develop, the approach and how we get over these inefficiencies that I saw in my workflow due to the fact that I didn't have the proper tools to get the job done in a manner that I would like it done, instead of spending that much time every day doing this. So some of these challenges, let's call them, included a lot of the products I looked at, and I looked at, especially the rebalancer, probably 10 to 15 different products that are available in the marketplace. And the funny thing is that of these 10 or 15, I would say 5 to 6 of them no longer exist as an independent solution. But the inefficiency I saw was worked around the tolerance bands being extremely challenging to work with and determine the efficient width of the band and the efficient usage. Should it be percentage or absolute? So we brought this as one of the big challenges to make a customized tolerance band that was, neither not too cold or not too hot, and didn't produce a lot of extra trades. And that's the other thing that a lot of software does, is especially computers are more binary than humans. They either want to do something or not do something. They don't prefer to hold still and use logic of, oh, that's close enough. You got to put absolute numbers in, and that's very challenging for someone who's been trading for 32 years and does it manually. You see an account and it'll be like, the person and they're a little over the band. You're like, well, that's still good. Whereas a computer's not going to want to do that. So we had to work on some special challenges there. The other big thing that most software new projects have is the overwhelming scope of them, not being able to break them into little pieces, as I alluded to earlier. So that kind of was, helped by having this building a block approach that they already had, and had some accelerators, that we weren't starting with an enormous product. We were able to break it into pieces, and actually some things were already jump started from their experience before, and to get us up and running in a quick and efficient manner. And then another problem that was, I'm sure, not unique to our firm. So we do have models that we trade off of, but you do have many clients come in and they're like, well, I like this model, but I don't like a couple things in the model. And now all these models don't look the exact same. So back to computers like, things that are the same, there's a very big challenge there to integrate a solution that is willing to have things look a little different, but still be efficient in the process. And we also had the challenge of getting data from many sources into the product where a lot of these sources don't offer good customer support. They basically, here's your raw data, you figure out where it all fits and how it all goes, and that's what their team had to do, is go through this data. It's not rocket science, but it is certainly tedious, and with financial data, accuracy obviously is enormously important. So you have to make sure you have all the right fields. And then the last thing I would say is certain projects are just really hard to automate, either because of the complexity or because of the need for some kind of input. Especially my thought is a lot of times automation is not really automation, it's delegation. So it takes it off Bill's desk and puts it on somebody else's desk. And that's how I found a lot of the trading software, at least, did that. I put in the models and the brain work, I guess, and then somebody needs to manage these all the time. And I calculated out. So Bill saves 4 or 5 hours a day, but his staff is going to end up spending 6 or 7 hours a day managing this thing that is supposed to be automated. And it is technically automated, but it doesn't always provide workflow efficiency. So I'll end it on that note.
Um, so Jim, besides frameworks and accelerators to build out the custom solutions, what other ways can technology help optimize portfolio management workflow?
Sure. So yeah, we've talked a lot about customized solutions sort of for end-to-end portfolio management and rebalancing. Obviously, lots of opportunity to customize a lot of things that Bill said. That each one of the points he made could honestly launch into a discussion around that specific thing that needed to be customized in his environment. But technology can help in other ways, like automated trading. Helps automate trade processes themselves. We can leverage AI. XRA has a fair amount of quite extensive experience actually around AI. We could put some of that to use for rules-based and algorithmic trading. We talked about portfolio customization a lot more extensively last time as well. But there's solutions that we can help with in terms of dealing with large data sets and rapidly testing a portfolio's performance. Things beyond standard Monte Carlo type of analysis. But you can actually use some leverage AI to help do some of that portfolio performance testing. Stress testing portfolios, so there's scenario analysis tools we could build out that determine based on basically you're trying to track the performance even historically, and then against different risk characteristics and changes to the portfolio for future hypothetical market events, right? So you can go back and look at how a portfolio would have performed under certain circumstances, but then also, what if, sort of a what if scenario, what if this happened in the market, how would the portfolio? So, you need technology, a lot of that becomes very, very difficult to try to do that type of analysis by hand, even in spreadsheets. AI and ML capabilities around real-time risk monitoring is another way that technology could help. All of this plays into workflow and into helping with the portfolio management, portfolio itself, as well as the workflow around it. You think of user-friendly dashboards, right? So there's a lot of data, and it needs to be visualized. How do you do that effectively and efficiently and look for hidden data points and areas of risk exposure that you might not see if you're trying to comb through that manually, right? So, technology, certainly Accelerate can help build out solutions like that. Automating data analytics, to provide, investment portfolio highlights. Again, that ties into data visualization. We talked about, increasing time to market. We can also do that by using solutions on the cloud. I mean, Accelerate has a lot of experience in all the major cloud players, whether it be AWS or Azure or Google Cloud, and so we can put together solutions, certainly Salesforce, that are cloud-based and using full stack, the full stack components of those particular clouds, like we did, with AWS and Lambda for our rebalancer, makes a much more efficient solution where you're not then encumbered with on-premise infrastructure and dealing with all that, infrastructure related, maintenance. And in the end, we're trying to help clients build out scalable solutions, that are elastic, right? They anticipate shifts in volumes, shifts in growth, anticipate future growth, and to help build out those types of solutions, but in a kind of bespoke manner, right? So we're trying to customize a solution and make those solutions that are highly technical and leveraging, some sophisticated, technological solution, cloud, AI, but do it in a way that's unique to that firm's workflow. We'd rather bring a solution and change our frameworks and modify and enhance our frameworks so that they fit our client's workflow, rather than have to force fit our client and their workflow into our framework, right? And we want to be able to customize it around them. So that, in essence, is what we feel how Accelerate can help, and how technology should be helping the advisory the advisory market.
So it's all about customization.
That's right.
So
It's all about Big Macs and extra pickles.
you're making me hungry. So we've come to the end of our time, but I do want to thank you, Bill and Jim, for joining me today on this episode of our Zip Chat. I hope to see some of y'all at T3 next in a couple weeks in north of Dallas, Texas, which is where I'm from, so I don't even have to travel for that one. But also check your email for future episodes of Zip Chat. Again, thanks so much, Bill and Jim, for joining me.
Thank you, Jill.
Thank you, Jill.
Thank you, Bill.
Bye, everyone.